Hello, everyone, and Happy New Year. Welcome to episode 22 of the Nord Search podcast. And as we go into 2025, I've been really keen to talk about not just the European power market, also look at the more global market as a whole. I'm really excited today to be joined by Tim Hood, who is head of North American power at Mercuria. So we're going to really focus on the US market today in particular. So Tim, thanks for joining me and welcome.
Thanks, Patrick. Thanks for having me on.
Absolutely, my pleasure. So Tim, if you could start with just introducing yourself, bit of career history, and then obviously talk about what you're doing in your role right now with Mercuria, that would be really useful.
Yeah, absolutely. Right now, currently my role, I've run North American Power for Mercuria. Funny enough, I started out at university. I was an accounting major. I worked as an auditor at Deloitte for 3 years after graduation, and realized quickly I didn't really want to be an accountant or an auditor. But at the same time, I got a lot of interesting exposure to the banking community. And then it was also timed with the deregulation of natural gas in North America. So in
Yeah,
Houston at that time, we had, Enron, Dynegy, El Paso, many companies that were spinning up and starting trading businesses. A lot of it was oil traders who were becoming gas traders. And then,
yeah,
that became gas traders who became power traders. So I got an opportunity to move from an auditing role to a mid-office role. So I left Deloitte and I went to work at this small company, Tejas Gas Corporation. Then we got bought out like 6 months later by Shell. And then I went and spent 24 years at Shell. So
right.
along the way, I got an opportunity to start trading power and have traded basically, wholesale electricity and natural gas since the late 90s. Then left Shell 3 years ago and came to
Yeah.
Mercuria. Yeah,
Cool, awesome. So, yeah, you've seen a lot happen in the last like 20, 25 years with the power markets.
absolutely.
Yeah. And your focus is it what markets have you been mainly focused on in that
As
time?
it, yeah, so as a trader, ERCOT Power is the market
Yeah.
that I have traded in the most.
Yeah.
I've traded in others, but I would say my kind of bread and butter is ERCOT,
Yeah. And
and then trading gas with that as well.
is
Yeah.
that the most liquid market in America? Quite,
No, it's not. I would say PJM is.
yeah.
PJM West Hub is probably the most liquid product, and a lot
Yeah.
of other locations use that as a leg on basis and things like that.
Yeah.
ERCOT is decently liquid, but ERCOT North Hub, it would be the location that trades the most. Everything
Yeah.
else in ERCOT trades as spread against it.
Cool. Cool. And is it mainly like prop trading that you were focusing on, or asset trading? Like, what were you when you were a trader? I know you're in a managerial role
Sure.
now, but like, what were you focused on at the time?
The first trading opportunity I had was more of an asset management role
Yeah.
because there was some assets that had been purchased and they weren't performing and, nobody really wanted to touch them. So it was like,
Yeah.
okay, give them to the one guy who's dumb enough to take that as a trading role. But it was like, okay, it was an opportunity. So I spent the first year really just kind of learning around assets and learning around optimization and trying to kind of dig out of a hole. But it was like, how do we lose less? It was not really very exciting in terms of like
Yeah.
being a trading, but it gave me an entry into the business, right? From there, I was able to kind of identify a few like customer segments and areas of the market where we could kind of at least extract a little bit of edge and kind of like build a bit of a customer business. And then over 20 years, essentially with myself and several other people, we really built out the entire like wholesale power trading business for Shell, and it's massive. Yeah, I think I'm enjoying my time at Mercuria with a little bit less of a overall hierarchy, you know?
Yeah. No, it's interesting what you said there. Just you take the opportunity that's presented to you, like
Absolutely.
at the time, because I speak
Yeah.
to a lot of people who are trying to get into trading seats, and
Yeah.
sometimes their ambition is that they want to start where you probably need to build yourself to that. Like there's a gradual
Yeah.
process. Get in somewhere and
Yeah.
make an impact there, and then grow within the organization. Prove yourself in different areas. I think sometimes people want to try and get to somewhere too
Sure.
quick.
I mean, they definitely do. I mean, people want to, get to the place that they see that they're aspiring for, which is like, wow, I'm a successful trader making
Yeah,
million dollars per year
yeah,
for the, whatever. That's fine. But what they lose sight of is in order to get that opportunity, they have to be entrusted with taking risk, right?
Yeah.
And
Yeah.
they have to be entrusted with somebody else's money, essentially, right? And they have to prove themselves along the way before they're going to get extension of that trust, right? So I feel like the best way to get into a trading role is take whatever's available, right? I mean,
Yeah.
and then work hard and make the most of it. And you're going to immediately start a network, and you're immediately going to be closer to where you want to be. Now,
Yeah.
no matter how successful you are as a trader, those are always yesterday's profits, right? I
Yeah.
mean, so, whether you're new or whether you're not new, tomorrow's money is never a guarantee.
Yeah.
Yeah.
No, I think that's great advice. For someone who's obviously like managed a lot of traders, when you're looking at someone that wants to be moving in that direction of being a prop trader, managing their own book, obviously having those big opportunities, what do you really think separates the people that you think are going to do well compared to the people that probably aren't ready to make that step, who may be doing asset trading at the moment and want to move over into prop trading?
It's an interesting one because it's, I mean, the technical skills are going to be there, right? The
Yeah.
candidates you're going to be recruiting are all going to be very capable. They're all going to have huge, high capacity, right? What you're really looking for is like mental resiliency, right?
Yeah.
And the ability to deal with failure. What I find is that a lot of people who want to be traders are people who are generally very competitive people. They're generally
Yeah.
people who are used to winning, right? And but they're used to winning at whatever it is. Maybe it's sport, or maybe it's a particular hobby they have, or whatever it is, or maybe they're just used to winning by having the highest grade in the class, or whatever it is.
Yeah.
But that's different than like the very like binary kind of outcome of the daily scorecard of did I win or lose today. My P&L is going to show it, and the market is going to tell me, right? That doesn't resonate that well with people who are generally used to winning, because they start to lose a lot more. Right,
Yeah.
than they're used to. And some people aren't emotionally really prepared to deal with that type of volatility in their life, right? And it really starts to beat down their confidence, and it really starts to make them second guess themselves. And, you know, I would say that's not going to be a recipe for success in the long run as a trader. Right. So I try to identify that through, kind of conversation during the interview process. Right. So,
Yeah.
yeah.
Do you want to see examples of failure then that people have had to go through and how they
Yeah.
handled that,
Absolutely.
rather than
Yeah.
just being this
Yeah.
high achiever throughout their whole life up until
Yes.
getting this job?
Absolutely. And if I look at my career as in trading, say over a 20-year window, I had one down year and 19 up years. And I learned more on my one down year than I ever learned on any of my up years.
Yeah, they say that,
Yeah.
don't they?
Yeah.
So,
Yeah.
so what did you learn in that down year?
Oh, what I learned was how incredibly painful emotionally the market can make things.
Yeah.
Especially when you're on the wrong side of something that you can't really get out of any quickly, right? And you have like a
Yeah.
liquidity gap or something like that, and you just know every day it's just going to be like in your face, and you
Yeah.
just have to just eat it and just like wake up and go there and freaking work hard and do the best you can and continue to freaking identify that next opportunity, because it really is about incremental decisions, right? Yesterday's
Yeah.
decisions are already over. They're already over.
Yeah.
Right? The only thing I can do is stay in the present. And and traders, it's interesting because we try to predict the future, but we are still in the present. The only
Yeah.
actions we can take are now.
Yeah. Is there anything you did to like be able to handle that pressure when you were going through that tough time?
I ran a lot.
Yeah.
I would go running, you
Yeah.
know.
Talking to an
Um,
avid runner as well. I know it's the
yeah.
best stress release, isn't it?
Yeah, I feel like for me, so kind of endurance sports, if you will, whether it's running or distance hiking or canoeing, things like
Yeah.
that, just where I'm outside but also where I'm just exhausted when I'm done.
Yeah.
That seems because mentally it just kind of creates balance for me, right? And I
Yeah.
think being outdoors is very important because you do
Yeah.
spend so much time inside as a trader, right? You still have to figure out how to have balance in your life.
Yeah. I think when you're going through that and in that high profile type of job, I think you do need to have other challenges outside of your day-to-day job that's going to like reset your mind. And
Absolutely.
because otherwise it can all consume you, can't it?
Yeah, and sometimes it's going to anyway.
Yeah. 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 So you just got to handle that.
Because it's really just there's enough going on. But hopefully those times don't feel like work, right? I mean, I
yeah,
do tell people I've never really had to work in terms of being a trader because I've enjoyed it so much. I mean, I
yeah,
do really enjoy the time that I spend focusing on the markets. Yeah.
yeah. And what do you like about it?
I like the story. So it's kind of generally see the world through numbers, right? So
Yeah,
for me, when I see information, and I've kind of translated into like term forward curves, if you will, in my mind, right? It's just kind of the way I think about it.
cool. Well, like someone who has obviously spent a lot of time building teams at Shell, you mentioned that you're responsible for building out that whole
Sure.
division.
Yep.
Before I ask the question, it'd be good to understand like what like kind of responsibilities have you had in the last, 10 years of your career, like as you've moved more down that managerial path.
I was, definitely like frontline kind of trader for a long time, but also very much, even as a book runner, subscribing to the team model, right? Like,
Yeah,
looking at depending on how much risk you're trying to deploy and whatnot, but, a team of like 3 to 5 traders focus on different durations, focus on different structures, focus on different
yeah,
asset types, and then also bring in, customers, right? So create flow, create some sort of a sales vacuum, if you will, where
yeah,
you've got some demand from somewhere, right? Now, that for me, that was connecting with the retail space. We weren't a retailer at Shell, but we served a lot of retail load indirectly, and we did a lot of like credit support things and lock boxes, if you will, to kind of support retailers, but we didn't directly like sell to mom and pops or CNI for the most part. We eventually bought a retail company, and then the wholesale business was the supplier into that, right? So that was a
yeah.
model for us on the building the customer sales piece. And then once you've got something that you're selling, well, now you buying power is actually a lot easier than selling power, in my opinion.
Right.
But
Yeah,
especially if you've got sales that you can rely on and things like that, right? Because now you start to go, okay, what is my landscape of how I'm going to purchase my power, and what is the tenor I want to buy that in, and so on and so forth. And you can then look at different asset types and yeah, in terms of how you want to build your supply stack. And for me, it's then about building like a flexible supply, right? Whether it's like heat rate calls off of gas fired or energy storage or things like that, something you can balance the intermittency of solar and wind with.
yeah. So did that sit under you then? So like the origination side and the trading side?
So at Shell, it was always on the trading side, right? But then
Yeah,
I worked very closely with the
yeah,
originators. And then we
yeah.
also built a sales business, for
Okay.
more of the sales to retail. Now, once I
Yeah,
came over to Mercuria, I came over with just traders as well. Like there was 3 of us. And, but we have hired across the board in origination. We also have hired a sales team. And so we have a model now where we're, 5 regions essentially in North America. And we've got, wholesale originators serving all of the trading desks and a sales team that supports all of the trading desks as well. So it's a very kind of consistent model in terms of how to replicate it, but it's much fewer people. I mean, talking 30 people and not 200 people, right?
yeah.
Yeah.
So at one time you had about 200 people under your remit
I
at Shell.
Not directly, but depending on what type of where I was in my career there,
Yeah,
between 5 or 35 people at any given time. But
yeah,
I would say that the business there is 200 in North America, and the business here is maybe 30 in North America.
yeah.
But yeah,
Okay,
yeah.
cool. So that leads me nicely on to the next question then. So like for someone who has consistently built teams, like in your view, like what is the secret sauce for building high performing trading cultures in teams? Because you talked about how important teams were.
Yeah. You have to have people who genuinely are interested in collaborating, right?
Yeah,
You have to have people who are honest, right?
yeah,
I mean, honesty to me is the most fundamental, like, table stake for building a team because you're really asking people to trust each other and trust each other with risk that, could very much, impact the other person in a very negative
yeah,
way, right?
yeah,
So it really is about making sure that you're yeah, I mean that's it. I mean it's trust. Yeah.
yeah. And how do you build that trust with a team? Is there anything that
Um,
you look at or do to help?
well, I mean every day with trading, you get an opportunity to kind of build that trust every single day, right?
Yeah,
You know what I
yeah,
mean? because people are going to make decisions and it's going to have an impact and there's going to be a P&L. And, so there's like, okay, do I trust that this person in time can be a profitable trader? Do I trust this level of risk that this person has? Do I trust that if there's something that's wrong, that they
Yeah.
have the experience and the wherewithal not to panic? There's things that you build up over time, and as you build that trust, that's how you also get more comfortable extending more risk and extending more VAR and
Yeah.
bigger stop losses and everything else. It's like this rope that kind of gets gradually extended further and further, right? It's
Yeah.
not some, and that's kind of like the same as like why it's difficult to start a trading career at the end, because I mean, maybe somebody just has like money they want to throw at you, but generally, people want people with a track record, right?
Yeah.
Yeah.
To get them in the team, to have the
So
trust from the start, it's track record,
yeah,
reputation, and then when
yeah,
they're in the team, it's working together every day.
yeah. And I
That
would
trust
say if it's
builds.
somebody that doesn't have a history of trading, like on my team, they would anticipate spending at least like 2 years before they would make their first trade,
What would they be doing there before they make their first
and
trade in that time?
they'd be doing whatever we want them to do.
Yeah.
In terms of like, making sure everything's right in the system, all the nuts and bolts of like making sure everything's correct, right? And then
Yeah.
also, learning what it is we're doing and why,
Yeah.
and starting to understand, what we're doing. And then
Mm.
as they show capability, you give them more and more to do, right?
Yeah. Is that
Yeah.
typically in like the role of an analyst
Yes.
before a
Exactly.
trader? Yeah.
Yeah. Yeah.
Interesting. Thanks for that. So we're really interested to talk about the North American power market, and something that I'm really interested in is obviously the AI revolution. That's what it's coined as today. And as we go into 2025, we know that there's so much work being done by not just the big tech companies, but a lot of startups. So the need for compute is huge. So from someone who's on the power side, like it'd be interesting to hear like your views on this and how big a focus is that for you this year.
Yeah. I mean, it's a really interesting topic because we saw maybe like 4 or 5 years ago, I would say, well, I guess a little bit longer now, a push more into North America and from the Bitcoin mining piece of things, right? And there was a lot of bullish sentiment there around how much that would grow and whatnot. And it is not small, but it is small in comparison to AI, right? And really, we had a moment, I would say, like a year ago, where the market kind of seemed to wake up from like a bit of a slumber in terms of like the term power markets, right?
Yeah.
Because, like PJM, for example, for like the last 10 years, I think it has grown like 0%,
Right.
net.
Yeah.
So between like efficiency and so on and so forth, a lot of people weren't very excited about some of these term power markets, because there's like population shifts from north to south. So
Yeah.
that was going on, industrially, there's things like that, so pretty boring markets in terms of like, hey, 5 years out, 10 years out. And at the same time, the term markets had been weighed down by like renewables that needed hedges and things like that. So it was like a lack of desire even in the back to buy. But suddenly last year, people realized, wait a minute, these data centers are huge, right? And we're
Yeah.
not talking about like 50 megawatt data centers anymore or 100 megawatt data centers. We're talking about 200, 300. Then people were like 500. Now it's like a
Yeah.
gigawatt, multiple gigawatts. And it's like, wait a minute, this is like, does anybody understand that this is not, it's like, you can't just do that. You can't start to create 500 megawatt, 1,000 megawatt demands like this and not have a massive impact, right?
Yeah.
Suddenly you started seeing, the different ISOs, coming out with their long-term load forecasts, and they're showing like 5%, 7%, 8% annualized growth for like, the next 5 years and 10 years, right? Where before they were showing like 1%, right? And that's all on the demand side. Well, the supply
Yeah.
side hasn't really changed as a function of that. You see what I mean? Yes, we still have renewables coming, wind, solar. There's more and more battery capacity all the time. But new gas-fired, people had pretty much written that off as not going to happen. Coal, we've been retiring, retiring, retiring. You know, nukes, people were kind of looking at saying, okay, I'm the last owner, if you will. And, that's been the view. That had been the view,
Yeah.
right? But what we've really seen in the last 12 months is it's all changed.
Yeah.
Now we have like co-location deals being done with nukes. We've got Meta just did a 3 gigawatt, announcement of gas fired in Louisiana. I
Yeah.
think that you're going to continue to see massive build out now of new combined cycles. You're going to have more and more gas fired. I don't think you'll see new coal built, but I think you'll definitely see old coal not retire, right? And then there's a whole massive like reuse that's happening in terms of like, the retired plants that have happened and those brownfield opportunities to then go and create something, right? And what's interesting right now is that something is demand because
Yeah.
the balance sheet of the AI demand is huge. Right.
Yeah.
I mean, I think over the weekend, what Microsoft said they were going to spend $80 billion in 2025 in capex for AI. I mean, it's amazing. Now, and that was what I found was interesting was that this time around they said it was equally split North America versus rest of the world. Where I think last year it was more like 90% North America, right? And it wasn't 80 billion either. Maybe it was like 50 billion. But I think
Yeah.
you're going to continue to see. So it's interesting because people are like, well, what if this AI thing doesn't happen, right? I hear that all the time. It's funny to me because it's like it sounds the same as in the 90s when people are like, what if this
Yeah. Yeah.
internet thing doesn't happen,
Yeah.
right? And I would say, look, it's going to happen. And I know it's going to happen because I've got like 10 companies I can look at and I can add up the numbers and they're spending about $500 billion this year.
Yeah. Yeah.
And they're
Yeah.
going to do it again next year. And
Yeah.
it's now, when is it going to happen? Okay, well, we can debate that all day long, right? I think that the speed of the implementation is going to vary, and every market's going to be different, right? But it's freaking going to happen. The AI
Yeah.
demand is coming, and that's just one element of demand, right? Autonomous driving. There's lots of other. There's algorithmic trading. There's other demand cases that are all looking for computational capacity, right? And
Yeah.
he's still a Bitcoin, so everybody's competing for electricity
Yeah.
for their use case, right?
Yeah. No, it's fascinating. Obviously, there's a race on for generative AI. All the big tech companies, like you said, Microsoft, Google, OpenAI, they're all Amazon. They're all in a battle now to
Yep.
get there first, and they've got the cash on the balance sheet
Yep.
to invest. Like you said, tens of billions a year, no
Yeah.
no problem. I was
And
reading
Oracle's a
a
good one I would point out because, sorry,
no carry on,
Oracle,
carry on.
Meta. I mean,
Yeah,
I say Oracle because they came out of nowhere last year because I view in terms of like the way that the market received them because, Ellison kind of saw the importance of these data centers and, yeah,
yeah,
and they use Salesforce. Don't count them out. These are all massive consumers of electricity.
yeah. No, absolutely. And I think what I've seen, I've done a bit of research this morning on reports from like Gartner. Obviously, the amount of power that's needed. They were saying estimate for data centers alone to run AA optimized servers, it will reach 500 terawatt hours per year in 2027, which is 2.6 times the level in 23. So they're going to have to grow power by 2.6 times. When you mentioned in the last 10 years, the demand's not increased by much more than a couple of percentage points. So if that's actually going to happen, it's like, how is it going to happen? I guess is the next question. Like what and how big a role does Mercuria play in that?
So, I mean, we're trading in North American power markets. We're definitely watching the demand growth, and we're watching the supply growth, as it's forecasted or as we see it occurring. Again, I feel like the demand is coming, right? The
Yeah,
timing of the demand, whether it's 2027 or 2028 or whatever, it's going to vary by market, and it's going to come, what I would say, as fast as possible. That's
yeah,
basically how fast. That's how fast it's going to come. Now, the supply, and I don't think it's going to come as fast as possible because the supply isn't really seeing the market signals right now that suggest that it should be coming as fast as possible, right? So there's going to be, a natural lag, and that's going to create, a window of volatility that, maybe it's a couple of years, maybe it's a little bit longer, but we're going to see, in my opinion, just a waterfall of markets that eventually are short capacity, short energy, versus, desired. And you're going to see continued volatility in weather, and you're going to see, pricing volatility that's fairly extreme versus what we've seen in the past, right?
Yeah.
It may not be in the next 6 months, right? But I think people can see that there's a lot of ingredients that are creating potential volatility in the term, and the supply is going to lag. It just naturally does.
Yeah. Well, the Gartner report predicts that 40% of existing AI data centers will be constrained by power availability in 2027, and
Yeah,
there could be,
that
there will be
that's the same
power
as saying there's a power.
shortages.
Well, they're constrained, i.e., means there's a freaking shortage, right? I mean,
Yeah,
I've got constrained load. That sounds like I'm out of power. Yeah,
yeah. So does that
yeah.
present big opportunities to trade those markets?
Hopefully, yeah,
Yeah, and
yeah. I mean, definitely. I mean, that's as a commodity trader, that's what you have to do is
yeah,
look at how you see the future changing, right?
yeah,
And whether that's the future being and then you have to understand what is your future you're looking at. My future being
yeah,
like balance of the day, like real time prices, my future being this week, my future
yeah.
being, this year. And then you trade duration, right? So yeah,
And do you think we'll see
there's a
those
price
shortages?
path.
Do you think we'll see those shortages in 25, or are they a little bit further down the road?
I don't think that there's much that I see in 2025
Yeah,
where I would say there's like, oh my goodness type of scenario out there for most
yeah,
markets. X weather, right? So the
yeah,
wild card is always going to be like, okay, if you have an extreme weather event, extreme cold, extreme heat,
yeah,
whatever, or if you have some, maybe like major outage somewhere on the
yeah,
system or transmission. So I'm not saying you couldn't have opportunity for volatility, right? And I do see like more stress on the grid, right? And I think so 25 is more of an observe year in terms of like, okay, what are we adding year over year? Did we grow another 7% versus last year like we did, And if so, you can start to see, okay, for 26, these are going to be tighter. For 27, these are going to be tighter, right? So I think it's
yeah.
really more of a projection into,
Mm.
but I don't think we'll see material like shortages until the second half of 26, maybe into 27. I do see, it seems like there's across a lot of markets, people are like trying to, some of the grid operators seem to be trying to pump the brakes on, how quickly people can interconnect, things like that. But I think that the loads are going to be super creative in terms of like how are they going to get energized, right? So
Yeah,
people's willingness to either look at a greenfield site or maybe a brownfield site, or
yeah,
maybe do a colo site with a renewable colo site with a coal colo site with something. At the end of the day, the load has dollars behind it that will get it connected, right?
yeah,
And the supply isn't going to show up until the market supports the construction of new build, and it doesn't,
yeah.
right?
So, in order to meet that demand, like, do you think it's going to be a real mix of actual types of producers? Like you mentioned, gas-fired plants, and you
Yeah,
mentioned
I
like
do.
renewable. Like,
Yeah, I think
is
we're going
it
to
has to
definitely
be
see.
a real mix?
Yeah, we're absolutely going to see, more gas-fired production built in the U.S. And that makes sense as well. I mean, the U.S. has relatively cheap natural gas, especially versus the rest of the world. I mean,
Yeah,
we're exporting everything we can. I think that the industry here is pro-frac and very happy to continue to grow, the supply side. And so I think that I've seen a pivot in terms of like the willingness of the large techs to look at gas fired generation as acceptable,
yeah,
even if it is still a transitional fuel for them, right?
yeah,
I think you also see investments into nuclear, right? Especially into the small nuclear reactors, things like that. Those are way out in time in terms of like when those will start to show up. Not really something that's tradable, if you will, but it's definitely to
yeah,
keep an eye on. And then, there's always, whatever new technology might show up, right? Well, that's the unknown, right? I mean, there's
mm,
clearly perception that possibly, you're going to get some massive technological breakthrough on in terms of like how we produce electricity, and in different ways, people have been able to do that in labs at very small scale. But I mean, realistically, we're probably 50 to 100 years away.
yeah,
If I had to guess, I won't be here to see it. I don't think.
yeah. How big a role do you think renewables will play?
I mean, Solar's cheaper and cheaper all the time. You
Yeah,
know, it makes sense. I mean, here in the States, there's a little bit of uncertainty with regard to policy. You know, we've got, the new president coming in, and, there was a lot of like incentives for renewables that were put in
yeah,
place
yeah,
under Biden. And we'll see. I mean, depending on who you talk to, those are either safe or they're not safe. And it's hard to tell. It's because a lot of those incentives still benefit the states where some of these Republicans are at, and they're not necessarily looking to, like, get rid of that inflow of jobs and inflow of investment and everything else. So I think it becomes political, and I think it probably doesn't get reversed, but I don't know. We'll see. So as long as those incentives stay in place, renewables will stay a significant part of the mix. If those go away, they'll still be a part of it, but I think wind will just get harder and harder to finance at this point. And I think
yeah,
that solar's fine, but shit, I mean, you only need so much power in the middle of the day. So all the markets that are overbuilt with solar are already having to contend with that, right? So that's where storage comes in, or some or other type of intermittent demand, yeah. But
yeah,
I don't think the data center demand for AI really wants to be intermittent, though, in the way that,
yeah,
like, Bitcoin mining. If I look at the crypto space, it's filled with economic animals, right? It's completely binary. What's my hash rate value? And what's my alternative, for, am I going to consume or not consume on this electricity, right? And if I can go and sell this power for more, then fine. I won't mind, but, within my constraints and boundaries, right? That's not the model that I see happening with AI. With AI, it's just, they're going to consume.
interesting. And you touched on storage and batteries.
Yep.
So, like, how big a role do you think batteries will play in the US?
I mean, the significant role. Yeah, because you've got, I mean, every market that we've seen is, get it to a certain level on solar penetration, right? You have a 2 hour problem, right? I don't know, but like here, like every day the sun goes down, right?
Right.
And it's kind of predictable. And what happens is when you get to, like, 10 gigs, 15 gigs, 20 gigs of solar in a market, well, man, your solar ramp, your that 2 hour ramp when that sun goes down is wicked, right? So it's either you have dispatchable, gas fired or peakers, or you ramp your other units, but the pace really is hard to keep up with if you don't have something like batteries in your system. Right now, the flip side of that is that, batteries then come and they crush it all. And, and also, some of the storage players are also focused more on the ancillary markets. But again, people don't seem to understand that those markets don't have infinite demand, right? So once
Yeah,
you overbuild, I mean, you just crush these ancillaries, right? So yeah, so batteries play an important role, but the market doesn't necessarily support them economically across the board.
yeah. And how big is the focus is that for you with in your team and what you do at Mercuria, batteries
Uh,
and storages?
we have merchant batteries on our wholesale desk.
Yeah,
So we have 500 megawatts of merchant battery storage that we run in ERCOT. I would say, as a firm, we were kind of early into the battery side of things. We were
yeah,
an investor in Jupiter and in Broadreach, and both of those have now been spun out. And, those are, some of the largest kind of merchant battery portfolios in North America right now. So yeah, it's definitely an area. And as a power trader, I think I probably spent time on this subject for like the last 5 or 6 years.
yeah,
Even back whenever I was at Shell, we had built out, our views on battery storage, because I always have thought that the batteries were like, kind of the holy grail for power trading, because it's like, wow,
yeah,
we have something other than like run of river or something like that we can create storage with. So it's always been fascinating. So I think they're really, really important, but I think that they aren't going to solve the demand problem that AI is creating, right? We're creating a base load demand, right? And we need base load power. Yeah.
yeah,
I mean, the batteries aren't creating any electricity. They're a net consumer, right?
yeah. So what just on that then, if they're not going to solve that problem, what do you think are going to be the main sources to help?
We're gonna have gas fired.
Yeah.
Yeah.
'Cause I saw Exxon did a deal with, I can't remember who it was a few weeks ago. I think it was Meta for gas-fired plants.
Yeah,
So it's probably going to be
exactly.
for these so more like the oil companies. Do you reckon they'll pivot more onto the gas side to help? with these big customers.
Yeah, I mean, I think that deal was like a combination deal with it also included a utility in
Yeah,
Louisiana,
yes,
and
that's right. That's the one I saw.
yeah, I think Entergy.
Yeah,
But yeah, it's like a multi-site, multi-gigawatt build out of combined cycle gas,
yeah,
which I would say, again, if you went back in time just this time last year, most people would say that no, absolutely not. We're not going to see anybody build any combined cycle in North America. Maybe
yeah,
you'll get some sort of like specialized program where you got some government incentive or whatever, and that you did it that way. But it's not going to be like a financeable project, right?
yeah,
But all you have to do is like find the demand, right? And if you've got somebody like a Meta, for example, right, that says, hey, I know I'm going to need a lot of electricity, so I'm going to go work with this utility. And yeah, okay, fine. Somebody else is going to need to go build these plants, right? Well, they're looking at this as a long-term demand. They don't need this power just for tomorrow. They need
yeah,
it for the next day and the next day, and you know what I mean? So they're looking at how do I get 20-year solutions? How do I get 30-year solutions? Because what they're definitely seeing is in anticipation that they're going to need this power on an indefinite basis.
yeah. That's really interesting compared to the European outlook. Like the idea of big investments in gas fired plants, like we're not really seeing that right now. Probably
No,
similar to what it was like a year ago in the US. Whereas
but
if is
you
Europe
haven't
going
seen
to
the same
obviously
AI
follow
growth
suit
yet
if they
either.
have the demand?
Yeah, but you haven't seen the capital deployment into the AI yet either in the same
Exactly.
way, right?
Yeah.
Which I mentioned earlier is like it was interesting to me on the Microsoft announcement that it was more of a 50-50 in terms of investment, North
Yeah.
America versus non. And I think you're still going to see my view is because of the companies that are involved,
Yeah.
most of them being American companies, right?
Yeah.
And because you're dealing with something that I think jurisdictionally there's a lot of uncertainty on. I think that there's going to be a desire to house a lot of the computational capacity within the boundaries of North America, right?
Yeah.
At least
Yeah.
in a primary way, right? I think that commercially you'll see other, data centers built out and so on and so forth as well, because these same companies have demand in other places around the world. But, you're also going to see that come from the other internet, if you will, which is, the Chinese internet and so on and so forth with its own expansion. But Europe, I think, is going to see the same growth, right? And I think the other thing that people aren't really appreciating is that I don't think there's very many governments in the world who can or are gonna who have any desire to like not build their own capability, right?
Yeah.
So you've got that as well. I mean, the demand for AI is not going to be just from the consumer, right?
Yeah. And is it your view that like renewable, just like a renewable majority power source is not going to be able to meet the demands for AI?
Well, I mean, it's going to come down to can you finance new renewable today in Europe, right?
Yeah.
Right? If you can't finance it because the term forwards aren't there, right? Or you don't have a long-term sale, well, then you're only going to build as much as you can finance, right? You know what I mean? So again, the demand's going to have to show up in a way that gets more projects built. I don't
Yeah.
think that building more solar solves anything in terms of like grid stability or, in some of these markets, right? If you've already got negative pricing through the valley and you've already got a solar ramp issue, well then adding another gigawatt of solar, big deal, right? That's my view. I mean,
Yeah.
that's not what you need, right? So whether it's more renewables, I think you get more renewables by like creating enough baseload, balancing to where you can support more renewables, right?
Yeah.
I mean, I think you need it all, essentially what you're going to need. Now, I'm
Yeah.
still, yeah, from an environmental perspective, I'd love to see as much decarbonization as possible, right? But I think that the demand is going to accept anything that it can get.
Yeah. Absolutely. Because like this is going to kind of this is so transformative that no one wants to be left behind.
How can
And
you?
there's a
I mean,
risk. There's a risk for any
oh,
government, major government, to be. They know what that is to be left behind. They don't want to be there.
exactly. And I think that we're in a period of change, right? I can see it. There aren't that many times in the world that you go through periods of change, right? Most of the
Yeah.
time, you're really just like getting efficiencies in the system, right? And you're taking something that already exists and like you're trying to like do it better and streamline it or whatever it is, but it's not new per se, right? It's just like fine tuning, right? But there's certain things that happen, like the internet was new and things changed, right? AI is new. Things are going to change. Now, I don't know exactly what that looks like, but nobody else does either, right? But there's some pretty interesting ideas out there. And more of those seem more realistic all the time, right? I can't even tell you how many movies I saw when I was 10 years old or 15 years old or 20 years old that seemed just like what we're actually now experiencing in real time or really close to. And the acceleration is amazing, right? The computational capacity acceleration is amazing. If you think about the next doubling in terms of like, you're basically doubling at a rate that exceeds everything else you've ever created, right? Yeah.
Yeah.
It's impossible to really get your head around 30 years from now or 50 years from now it's going to look like. It's impossible.
Yeah, no, it's fascinating. And thanks for your thoughts there. Absolutely. I'd just like to finish with your outlook for 25 and any potential predictions that you'll see in the power markets.
I mean, I think that definitely the thing that people will be focusing on is going to be like year over year, normalized weather demand. Where are we seeing like pockets of, kind of problems on the system, transmission wise, things like that. So I think
Yeah,
the opportunities are going to be more localized, whether they're weather events or specific kind of like, particular locations on certain areas of certain grids. And then I think that, definitely people should keep an eye on, battery capacities and how much has come online or not in that type of thing. And then, the big fundamental thing to watch will be changes from a governmental perspective in terms of the incentives, right? So
yeah.
that'll definitely have potential to wreak some havoc, if you will, in the term, if those policies change.
And how do you plan for that?
You plan by staying very focused on the information that's out there and really kind of making sure you have good access to information in real time and that you also have a way to distribute that information efficiently with your team. Yeah.
Yeah. And so do you think, like, compared to this time last year, is your outlook that it will be more bullish or bearish, the market?
We had a pretty mild summer in some areas. I don't have any particular view on it. It's going to be volatile with weather. I don't see anything that's like striking me as like that big of a problem for 2025. Of course, I'm going to say that, and something major is going to happen. But yeah,
Yeah. Massive cold snap, which
yeah,
is potentially happening
yeah. I
now.
mean, a weather event, sure, and we
Yeah.
have some weather now, but it's not creating like end of the world type things. But who knows? I mean, things can change.
Yeah. Awesome. Thanks for your time, Tim. Appreciate all that.
Absolutely. Thank you. Appreciate you having me on. Yeah.
Yeah. Awesome. Thank you.